Right now with Mitul Kotecha. He's Senior Emerging Market Strategist at TD Securities, now joining in on the show. Mitul, hi there. Morning. Clearly, it's the trade war jitters that seem to have spooked the global markets. Now, while many of the analysts are saying that they expect a deal, there are concerns that we could see Donald Trump yet again unleash higher tariffs by the end of the week, and that could aggravate the tensions with China and even extend the time frames of the talk. Is that a big worry in the market?
Clearly it is. I mean, I think the sentiment that we've seen across asset markets has been extremely negative, and this has extended yesterday with the US and European markets, and in today's Asia session we're seeing pressure on risk assets in general, and safe havens such as the Japanese yen are doing much better, but clearly markets are expecting that the worst outcome, that we will see the tariffs shifted to 25% and on $200 billion worth of Chinese exports to the U.S., plus the risks of another $325 billion plus of tariffs as well, and that could obviously derail some of the global growth stabilization that we've been seeing, and certainly have much more ramifications across the globe, and that's the reaction that markets are fearing at the moment.
Each time it's any spark between US and China when it comes to manufacturing, the same question really, boils down. Is it advantage India? Would it really be? And in the near term, though, having said that, do you feel that India will also bear the brunt? Because even our markets have fallen about 350 odd points from the top on account of global volatility and weakness.
Yeah, look, I think India is definitely in a better position than most economies. Firstly, the economy is more closed, less trade-driven, more domestically driven. I think there is a sense that that the recent decline in oil prices has been beneficial for India's markets as well. And if there are tariffs put against Chinese exports, I mean, although India and China don't compete with too many export goods to the U.S., clearly there could be some advantages to India if companies shift production to India, or if India is able to capitalize on some of the constriction in exports that China has to the U.S. And clearly, India, from a manufacturing sector, could be prone, certainly liable to benefit on that front. But manufacturing is at different levels, and a lot of the goods are quite different, so it's not obvious that India is going to be a key beneficiary. But I do think, on balance, India will gain from any tariffs against China.
All right, Mitul, appreciate your time and thank you for joining us.